All right, so taking a look at this daily chart of the Dow, you can see this is actually rewound back to, I'm going to bring the cursor window up here so you can see it. This is rewound back to the 18th. So we know what day we're dealing with. This is Thursday. Now, take a look at what we have here. I'm going to squeeze in some market memory. We want to take a look at about a year. That would be ideal. 6 months to a year for a daily chart. So you can see the market was already in a downtrend. Okay, so even before we get to all the discussion of the 19th, you can see here that the market's already in a downtrend, and we're back down below 14,000. So even if you weren't listening to the earnings issues Bank of America had missed and so forth, even if you weren't up on the fundamentals, even if you weren't necessarily listening to the banter on any of the channels, whether that be CNBC, of course now we have Fox Business, whether that be Bloomberg, we have 3 channels out there now. Whoever it may be, leading up into this day, there was already a lot of weakness. Again, this is a daily chart. This factored in a couple key misses, especially I think Bank of America really loomed big on the week. But beyond all that, we dipped down below 14,000. So we knew 14,000 at one point had been resistance, and at this point we can kind of talk about it as support. But then once we broke down through support, we found the middle line of the wave, which had been slowly transitioning to more of a sideways angle. I'd say this is arguably 2 to 4. Okay, so let me know if anyone sees anything different. We can discuss it, but right now I see 2 to 4 on that. So this is the daily chart. Now, of course, we knew what happened on Friday. That's Friday's candle right there. So let's take a look at what's inside that candle. Let's take a look at the 30-minute chart. So understanding the market was already heading down to a certain degree at that point, I'm going to go ahead and rewind back to what the market looked like as Friday opened. Now, remember, I have no problem with anybody looking at the seasonality. I guess I would call that 19th a seasonality. October itself is a seasonal month in terms of most drops, significant drops in the market occurring during the month of October. The 19th just happens to be a date. But overall, October's a tough month. It's earnings season. It's last quarter. You know, historically speaking, this is typically a time of year that we have some weak markets. Now, this is the market on the close on the 18th. This is the 4:30 close. This is how it looked like on the 18th. If I were to go ahead, and again, I don't want you necessarily to get wrapped up in the lore of what happens on this day. I think a lot of people were emailing me about that, saying, hey, you know, why couldn't I play the seasonality? I said, you know, I don't have a problem with that. I don't have a problem with you understanding what, you know, each one individually understanding what's happening seasonally in this market. You know, October in general is a seasonal down month. You know, if you look at any kind of seasonal chart. Seasonals, you know, for example, you know, I'm familiar with seasonals, especially coming from a commodities background. We understand the seasonality of planting and harvesting and hurricane season, you know, those types of things. You know, hurricane season, we used to always joke down here, never be short OJ during hurricane season, especially from September to October when the worst of the season is here. You know, that's why I think Andrew caught a lot of people off guard, because Hurricane Andrew came about in August. You know, but September through October typically are most volatile weather months. You know, now it's applying to the crude oil market as well. So the seasonality is not an inaccurate way of judging the overall environment, but the details of entries and exit. You might go into the market understanding the seasonality of that market, but after that, you have to find the price in order to manage the trade. So don't let seasonals just get you in the market. You have to be able to manage it. So this is 4:30. You can see the setup on the 30-minute chart. As soon as we opened on Friday, you can see what happened. We broke down. Now this was neither pre-confirmed or anything, so some people might have been surprised. If you're going to play a move like this, if you're going to play a seasonal move on the Dow, your best bet is to go ahead and take a look at the futures. Now, by the time that we met up Friday morning, the futures had already been down, and I could see that on my chart. If you're ever curious what they look like, for example, the stock market isn't open yet, but I could pull up right here. This is actually showing us a little bit of yesterday. Let's go back to Friday. Here is Friday's action. I'm going to highlight that. So just remember, even before the market opens up, we can tell what the Dow futures are doing. I mean, there's no doubt if we're going to have an open, a gap open, or a gap close market, because by looking at the by looking at the futures, I can absolutely tell what's going to happen. It's already trading before the 9:30 bell even rings. So we knew we were going to get a gap down on Friday. There's no question about that. But we need to have the setup. Okay, so my showing you this Dow futures chart, my showing you the Dow Industrial Average is really, even if you're going to use a seasonality, and what I would like you to do is broaden the consideration. If you're going to use a seasonality in stocks, if you're going to use a seasonality in commodities, go ahead and understand that the overall direction might be up or down, but look for the setup. Okay? In many ways, the seasonality is going to be a secondary confirmation tool. So if you're curious how to use the seasonality of Forex, of futures, of stocks, go ahead and do that, but make sure you use price patterns, price action as your trigger. Okay? So just a quick look there at what I wanted to explain, and mainly I think the story is told as we went into neutrality on Thursday. Look how the markets really went neutral, and also looking at the fact that we dipped down below 14,000. I think that was a pretty big sign that support was no longer, that big psychological level support was never really a factor any longer in terms of what happened Thursday and then what happened Friday. That factor really just kind of flew out of the market as soon as we dipped below it on, let's see, I think we dipped below it on the 15th and then stayed below it on the 16th, which was Monday and Tuesday. All right, so there we go. I just want to at least cover that because we had a lot of questions about that. All right, so what's going on this morning? When we took a look at that dollar sinking, let's take a look at the euro. And in fact, I did have a 4 a.m. setup on the euro this morning. And it was a setup that occurred on a 30-minute chart. It's a triangle pattern. And I want to talk a little bit about that.